advising clients across the country. Here he is, your host, J. Christopher Boyd.
Welcome back to Something More with Chris Boyd. I'm Chris Boyd, certified financial planner practitioner, and my office is Asset Management Resources. Thanks for being with us for our second hour of the show, and we've got a great cast of characters here with us right now. We're going to be talking about real estate and the real estate market on Cape Cod, mortgage issues as it relates to that. To help us do that, in addition to Jeff Perry being with me throughout the show, we've got Savannah Fabbio of Shamrock Home Loans. Sorry, I did that wrong. I always find a way to mess it up. Sorry, but thank you for being here. And Annie Hart Cool of Sotheby's, thanks for being here.
Happy to be back.
Both of you are returning guests, so that's great. And lots to talk about. So much
lots
to discuss. I mean, where should we begin? I think this is the time of year when people start thinking about like real estate season, if you will, springtime and all that. Maybe Annie, I'll just start with you. With the pandemic and over the last few years, real estate prices have gone up a lot. The real estate listings have gone down a lot, it seems like.
Exactly.
Where we stand? Where are we with this?
Well, we're still in a scarcity market, so there's not a whole lot of listings out there, but there's still a lot of interest and a lot of buyers. And so we are predominantly a second home market, so we're considered kind of a luxury, world-class neighborhood, but people still want to be here. And that's the neatest thing. I mean, Cape Cod is very attractive to the second homeowner because we offer so much. And as a result, lower inventory means fewer home sales, which means much more interested buyers willing to pay a premium for a house. And of course, as in the last show we did together, was all about getting local home ownership. Yeah. Very difficult with the prices elevating to the places where they are. Right. Now, for me, and I'm hoping Savannah can speak to this, one of the things that's happening for me is that rate change hasn't affected my business because people with wealth don't really care about the rate. Yes. And so what they often do is they'll purchase with cash from their financial accounts, yep, and then they'll refinance right after because the wealthy know that preserving wealth happens by involving an institution, a banking institution. Have you been seeing that too?
Yep. More people are. It's dropped off a little bit with how rates have gone up so quickly over the last year or so, but we did have a lot of people buying, especially during the pandemic when it was cash is king, you can get in there first. We had a lot of people doing delayed financing, so using their investments and then turning around right away and getting a pretty low rate. The last year, still doing it, but just slowing down a little bit with comfort on what they're getting on their investments versus what they would pay with us.
Right. So. The other thing that's tricky with this inventory is oftentimes there's a septic that's failed. An inspection that doesn't happen because they want to trick out their offer so that they get in first position with the buyer. What
does that mean? They didn't agree. They didn't do
remove the contingency, which I never recommend. Okay. I think you should always do an inspection.
But then they have it tested when they move in.
Yes, and then they find out something's wrong, and maybe the bank is not keen on loaning them the money to fix whatever is there. So we're seeing some of the local banks get real creative with, is it a contractor loan or some sort of loan that comes? Rehab loan to help manage that conundrum.
What is that, Savannah?
A construction loan. So there's a lot of different types. We have construction loans, we have rehab loans, but basically you're getting a contractor to go say, it's going to cost X amount of money to do this project. Once it's done, this is the value of the home. There are
so sometimes enhance the value of the home, presumably. Okay.
There are sometimes, Annie mentioned a septic. So if it's just a septic that needs to be done and it can't be done at the seller's cost, we can find a way to add that in as an exception. So we would close the loan, get everything in place, and then have the septic done. Happens a lot of time in the winter where the contractors can't break ground. So we work with them to make sure, okay, this house works. We've got the contractor. We've got it approved by the town. You can live in it. We just need 30 days maybe to get it done. And sellers are usually comfortable with that.
Interesting. Yeah.
Yeah, and so I think more than ever, realtors and mortgage folk are working closer together because we have these little sticky wickets coming up
hiccups
as a
that need
result
to be
of the
resolved.
market, right?
Mm-hmm. Yep, exactly.
Getting more creative. I know that there's some other. We used to have a bridge loan when someone had a house to sell and they'd borrow from one to buy the other, that kind of thing. Those are getting. Those are back.
They are.
It's crazy.
Interesting.
Yeah. So it's been a wild ride.
So but that's usually not going to be as appealing to the seller to deal with someone who's got a bridge loan, or is it something where they perceive it as cash?
They perceive it as cash. It depends on what the competitive bids are. So I just had a property that had 5 bids on it. And you do a graph and you show all the varying points to each bid, and then the seller has to decide, weigh and measure where they're going to go with that. And I haven't seen a bridge loan be too terribly disagreeable. I think one of the things about a bridge loan is it can be a domino effect. If that falls apart, then everything falls apart.
Typically with a bridge loan, you're holding both homes, right? As the buyer, I have my house that I have here. Let's say my payment's $2,500 a month. I can also afford to buy this next house. So I don't need to sell in order to buy is really the key. And sometimes you do try to line everything up and make it contingent on selling, but that contingency word is where a lot of sellers don't
Everybody
like.
hates that. Yeah.
Because
Because of the
happens.
domino effect.
Mm-hmm.
Yeah.
I would imagine that a bridge loan is a lot more attractive than a contingency on the sale of their
Absolutely.
right. So, as a seller, I wouldn't be too nervous. I mean, as a seller, I wouldn't be too nervous if my buyer had a commitment on a bridge loan. It sounds like they're going to move forward either way.
Mm-hmm. Yep.
Right.
Well, it sounds like it's gotten more complicated, basically, in terms of the way people structure deals, and have to think about these nuances with so few transactions happening. You have to have your financing all buttoned up. You have to have, be ready to pounce.
Yeah.
Are people still, are transactions still happening over asking price at this point in time?
For me, yes. I put a house, and I will tell you from a person who's been doing this for 25 years, it really challenges my confidence in pricing when I price something I think is right on the money. And like I did this week, I priced a beautiful home in Falmouth for 1.499, 1.5 essentially, right?
Yeah.
And it sold for over 2.
Wow.
And you
it's
just
because of this demand.
Yeah.
There's a lack of supply to meet the demand.
And
in some case, huh?
it was ridiculously unique. Some unique houses wait a long time because they're that unique.
Yes.
But we had 5 bids, and 2 with 2 in front of it.
Wow.
So pretty amazing when you think of it.
Yeah.
And so 3 days. Sold in 3 days.
As a business owner, in a sense, you have a team of people. How do you handle when there's this kind of limited supply and fewer transactions? Is it problematic as you deal with these kind of things? I mean, your cash flow must change.
Yeah, absolutely. And so does your tax outflow.
Right.
Everything changes.
Yeah, right.
Well, traditionally in our business, an awful lot of agents don't have business plans, and of which
It seems like a lot of people are part-time
yeah,
agent practitioner, that
Right.
they're kind of semi-retired and said, "Oh, I'm living on the Cape. I'll sell some real estate," that kind of thing, right?
I checked this yesterday actually, and 2,800 agents.
How many? 2,800?
800 on our
And
beautiful
how many
Cape Cod.
transactions last year?
Since the first of the year,
Okay.
only 312,
Yeah.
of which I've done 20.
Wow.
So I think one of the things that you need to, that's a pretty good ratio.
Yeah.
So I'm going to just say that one of the things that's really key in this climate is for people hiring a buyer's agent or a seller's agent, check their bio. make sure they have their hands in the pot. They need to be doing real estate because they're going to be the people that know the loan agent to call, who's going to get it done on the weekend.
Right.
While she's running.
Yeah, right.
That kind of thing. Like they're going to know who's going to be Johnny on the spot for you.
Right.
They're going to know who's the best dumpster guy because it's spring cleaning and it's all starting to happen. They're going to know the best septic guy to get it done right away before it goes on the market. So, I think
plugged in all these ways.
Right.
Yeah,
so I think from a consumer point of view, if I could give any information to your listening public, is that really don't hire Aunt Sue who sells 2 houses a year. It's your biggest financial investment. Hire someone who's going to negotiate for you and do a good job.
And don't you think a lot of times people will just tell the prospective listing what they want to hear for a price and things like that you need kind of good guidance as it relates to this.
Exactly.
Not just the number you want to hear.
Well, and it's not just the number, right? I mean, there's so much that goes into real estate depending on what needs to be happening with the house, how the house is presented, how it looks online, because since, the internet, that's how we sell houses now.
Yeah.
And also how you're going to negotiate the offer. Sometimes money isn't as important as time.
Right.
And so, people need to be able to look at the offer and say, you know what, I have a person right now who's not well. And I said, given that this is stressful and stress is something that provokes your illness, why don't we go not for the highest number, but go for the good date? And you'll be done and you can breathe. I mean, I'd love the higher number because we all get paid more.
Sure.
But the date doesn't work. And unless we can't get the one with the good date up to that number, let's consider that because there's less room for error in that contract. So you want someone who's going to understand that it's not always the money.
Right.
You got to kind of feel it out, see where people are. So someone who has great negotiation skills in this climate and is well liked by their peers. Because you're putting an offer in with someone who holds the listing for your buyer client, you want to have a relationship with that listing agent.
Yeah.
And it goes true for the lender as well. You want a local lender. Everybody has knowledge of them and how they work and a close on time and all that, not put the added stress on. Yeah.
So Savannah and I do a lot with Shamrock, and we pick up each other's calls. There are some people that call. I mean, I'll admit. I let them go to voicemail if I'm busy, but that's not what we do.
Yeah,
so, it's one of those things where you want to have someone who has a relationship with all the players so you can get it done.
Yeah. All right, let's do this. Let's take a quick break. When we come back, let's talk a little bit about rates to kind of get us back. I mean, I know a lot's changed over the year, so we want to talk a little bit about how to navigate what these changes are and how to think about it. All right, so we'll come right back. Stay with us. Welcome back to Something More with Chris Boyd. I'm here with, we're talking about real estate. I'm here with Savannah Fabbio of Shamrock Home Loans and Annie Hart Cool of Sotheby's. Both of you, before we begin back in our conversation, share your contact information. How do people reach you? Savannah, why don't you just start?
So my website is savvyhomelending.com, Savvy, SAVVY. And then my phone number, 508-317-8183. It's my cell, so easy to text.
Now, is Savvy a play on your name?
It is.
Yeah, I like that. I like
Very
that.
nice.
Yeah, that's fun. All right, very good.
I'm going to have to come up with something creative. Annie Hart Cool. I'm with Sotheby's International Realty at 508-868-0664. That's my cell phone, direct line. And my team, the Annie Hart Cool team.com. You can see all of our listings and closings and things that are going on at the website.
All right. And that website?
The Annie Hart Cool team.
There
and
you
Hart
go.
is Hart, and truly, I married a cool guy, COOL.
There you go. So, very good. Okay, let's talk a little bit about rates. I mean, we've all heard that rates have gone up dramatically over the last year. I realize it changes from day to day, so I'm not looking for you to lock in. Here's the rate, but where are we today? I've heard rates had gone up. I've heard rates have gone down. I've heard, I don't know where things are today.
Yeah. It really all depends on what you're buying and what type of loan you're buying, because there's a ton of different products. But if we're talking about maybe your primary residence, a 30-year conventional loan,
Okay.
You've got a rate range. I tell people just everyone's situation
Because there's
different.
different credit and all that kind of stuff.
Down payment,
Yeah.
right? You could be 6%, maybe 6.5%, depending on where things are.
Mm-hmm.
Rates went up very drastically over the last year, and it was nice. The beginning of the year they went down, and we had a little bit of more confidence, I guess would say, in the market, and buyers were getting back out there, and then they went back up a little bit. And we're not directly impacted by what the Fed does, meaning when they raise prime, it doesn't raise our rates. But a lot of people don't know that, so they get a little nervous. But what happens in the market can really impact us. So with everything happening with the banks in California, we're a little volatile. Not a little,
So
we're
maybe
volatile.
pay more attention to what happens on the 10-year Treasury than the Fed,
Yes.
to give indication of direction, that kind of thing.
Yeah, I think the Fed, in my opinion, the Fed uses numbers that are, it's the data they have, but there's some that, maybe it's more information is coming, so we kind of know rates are going to be going down. It's just not what you're seeing exactly right now. So we look at different data than they do. So definitely that would be helpful.
I think too, one of the cool things about this particular time in the market is this is the time for those folks who have financial analysis paralysis, who are afraid of even the second home loan or first time home loan. This is the time to go in and see you and have you do a credit check and do the whole thing and put them on a plan to be positioned next year or the year after once they've cleaned up their stuff. Don't be afraid to do that. That's what I really encourage the folks that I work with, that if they're dancing around the idea of it, maybe not right now they can pull the trigger, but if you go talk to Savannah, she'll figure it out, like how you can clean up your financial background so that you'll be in a powerful position next year.
Yeah, absolutely. And I encourage people that when should I look? Okay, you had the thought. Let's have a conversation. You never know. People get nervous, and maybe embarrassed is a better word. They get, well, you're going to see everything. I am, but I'm also not going to judge you. You've got something. Everyone's got stuff that we can kind of figure out. Hey, maybe this works now. But
Some credit stuff that you can say, this we can figure out how to clean up. Let's
Or
resolve.
student loans,
Yeah.
or, a lot of people have background stuff that they're carrying that there's a lot of shame around money.
Yeah, that's so true. Yeah.
And people try to do it on their own, but they just don't have the experience, or they Google stuff. And sometimes it's good, sometimes it's
And
not.
sometimes they make bad decisions in that's not always accurate, right?
Right.
You can end up prioritizing the wrong thing, perhaps.
Yeah, or they'll talk to their friends who are in a totally different industry, who kind of give good intended but bad advice.
Armchair advice, but not always, not always
Right.
the right advice.
So Annie's 100% right. Absolutely talking to people.
It's just a good time to do that.
Yeah.
And because it is a scarcity market, right? So not everybody's winning, but it's also a really good time for someone to tap into their financial health, not only with buying real estate,
Right.
but with you as well.
Absolutely.
I feel like I've been doing a lot of that kind of coaching, it may not be immediate gratification.
Yeah.
Thank you.
Yeah.
But really good footsteps toward it.
Yeah.
There's a lot of new programs that have come out too, because if you think of like your first time home buyer maybe doesn't have enough of a down payment with the prices of homes going up. So now we've got these different programs that have come out, which are really great to be able to pair with somebody. And there's different, maybe bank statement loans where we're not digging into the 10 different businesses you have. We're looking at cash flow or rental history on an investment property. So there's a lot of different things that have come out in the last couple of years. I will say guidelines have been tightening because the market's volatile, but we can get a little bit more creative as well as making sure everyone's protected.
So what are these kind of things, like an FHA loan as opposed, or something entirely different that you're talking about?
I'm talking about something different. So FHA is for a primary residence, 3.5% down. I'm thinking more somebody that maybe it wants to buy an investment property and they have a whole lot of things that we would need to look at. Maybe they own a few businesses or whatnot.
Complicated,
right? And it's a little bit easier. We look at this house is going to rent, the market rent is $3,500 a month, and we can use that to help them qualify.
Okay.
Not help them, to qualify them, instead of going through all of their financials and stuff.
Just on the math of the property itself.
Yep, we use 75%. It has to make sense, and the rates are going to be a little bit different, but for some people that's totally fine because it's an investment and they've done all the math and it works.
Now, I tend to think in terms of primary residence, but you said something, Annie, and now you just said something as well. You're really thinking in terms of second homes or investment properties or things of this sort. So is that the makeup of the buyers these days, that it's heavily people who it's not their primary residence?
I get a really good mix of both. People that live and work on the Cape, I tend to get a lot of primary residents, first-time home buyers. A lot of my clients from off Cape, though, are going to be those second homes and investment properties because they know it's a great place to be and they can make some money.
Yeah.
And they can retire here when they're ready.
Yes.
So they're
which is
often
appealing
looking
to
for
everybody.
their future home.
Right.
But while they're waiting to move here, they're going to rent it or, use it in some other way. So, or just come down on weekends, that kind of thing.
Yeah.
But we do have an awful lot of folks on the Cape who are right-sizing. And what I mean by that is the folks like me that have a 4,000 square foot home that nobody's home anymore.
Yeah.
So who needs it all? So, they're trying to get smaller, or the person who needs to get bigger. That third baby came during COVID and the house is a little tiny. So, people are right-sizing with their homes, and hence the bridge loan helps.
Yeah, very good. Very good. You mentioned about the conventional loan rates. Is it significantly different on jumbo rates?
Yes and no. Again, it depends on the dollar amount. Every company is going to be a little bit different. To be very truthful, a big bank or any actual bank is going to want your investment accounts, so they might do some things for your rate if you can pull a relationship over. We don't look at it that way. We just give the rate as we have it. So ours actually could be a little bit higher sometimes when we look at them. The jumbo rates are pretty good because as the home rates have gone up, our conventional loan limits have gone up. So you're over 750,000 is really that's not the exact number, but
In
is
that
your
ballpark,
general your jumbo loan.
Yeah. Okay.
So.
And then, one of the things that I've wondered about at this time of year, I'm just going to pile on here, Savannah, with all kinds of mortgage stuff. But when it comes to, thinking about rates in a higher interest rate environment, people tend to talk about things like adjustable rate mortgages more, or they might start thinking about points. Would you give us your thoughts on these different options, how people might want to think about them, or whether or not that's a good idea?
Yeah. So an adjustable rate mortgage is going to be, it's say a 5-1 ARM. For 5 years, your rate is fixed, and then every year after that, it can change. It can be great for the person that is comfortable with it. So somebody that has anxiety over rates changing, I wouldn't recommend it. But somebody that says, okay, I can refinance in 5 years, totally fine. I've
never used that kind of a mortgage, but of course the rates were different. But I've refinanced often.
Yeah.
You know what I mean, over the life of having a home.
Yeah.
So, I get that maybe that could have some virtue. It's just not necessarily what you always think in terms of. And we're in a very different moment in time than we were a year ago.
Right.
When thinking, or maybe, I don't know if it's a year or a little over that, but when thinking about rates and how to think about them, maybe.
When they were in the 2% and 3%, you're going to lock in for the 30 years, 20 years, whatever you're looking for.
Yeah.
It didn't make sense to do an adjustable. Now it can bring your payment down.
Yeah.
Because it's a lower rate. Now.
And I think we have this saying, date the rate, marry the house, which, if adjustable gets it lower, then just commit to, it's like, okay, it's going to need a roof in 5 years. Okay, it's going to need a new mortgage in 5 years.
Yeah.
So date the rate, marry the house, because houses are so competitive that if you want to get in that door, you've got to figure out financially how you can make it happen. I know I have a house right now that's it had a delay because of a title issue, and now the young man who has the offer on the house, the P&S on the house, no longer has the financing capability to meet the original number of the house. So we're working on
Because
that.
of rates?
Because of rates.
Yeah.
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 And he's self-employed, which,
Makes it all the
Can be
more
tricky.
difficult, probably.
and I don't
yeah.
think he's paid taxes in 3.
Oh,
do you know
geez.
what
Yeah,
I mean?
yeah, yeah.
He has none of that financial.
All that
but
stuff that you
this
go,
is the
"Oh,
kind of thing
yeah."
that I tell you you need to clean up.
And
this
plan
is
ahead-
why,
plan
yeah,
for.
you
Yeah,
just got to
yeah.
clean it up so you're not in this sticky wicket.
Right. And sometimes it's okay to have income because it could actually help you.
Yeah. Don't hide it all.
Yeah. Yeah. Right.
And in the rates, that's a great point that you bring up. Rates have changed so much that even extending 30 days, or your case it probably is longer, if that payment, that 0.5% or whatever it goes up, that can have a really big impact on the payment, the monthly payment.
Yeah.
People don't necessarily realize that when they're out looking for homes. You really need to be talking to your lender. I have clients that I talk to almost daily, and then some weekly. So, hey, I'm going to go look at this house. Am I still in the same ballpark?
Right. And some people from my generation often say, oh, I paid 22% or I paid 18%.
Oh, right. Oh, yeah.
But they
Yeah.
forget that, like,
1980 or whatever
my
it was.
first
Yeah.
house was $78,000. So 22% didn't feel so horrible, but
Well,
it does on
I'm-
a $500,000.
I'm sure it did. It just,
yeah. It was just a whole different animal, though.
Right,
It's
right.
all relative.
Yep.
So,
Well, of course, incomes were different then too, and for many people, right? So yeah, I don't know. Don't want to go there again, though. I'll tell you that.
no.
Yeah,
And you asked about paying
points. Yeah,
So that is a conversation that I have with almost every client because people hear that they need to pay points. And what that is you're paying a percentage of the loan to buy the rate down. And that's not a 1 point is 1% down. There's more into it than that. But it works for some people. I haven't found too many lately that I think it's a good idea. We do expect rates to come back down. And if you are comfortable with the payment that is provided at the what's called par rate without paying points, then I suggest going with that because we can refinance you into a lower rate and you're not essentially throwing money away.
so the likelihood is most people don't stay with a mortgage for the 30 years or whatever it is.
Yeah.
In all likelihood, it's whether they move or refinance, it's very likely they'll have a different mortgage
Exactly.
in 5 years or whatever it might be. What's the average? That
7 years.
7 years, yeah.
But lately, I mean, I don't have the stats on this, but from what I'm seeing with my clients, we are on plans to refinance within the next year because we
It just
expect
will
rates to
it'll
go.
be more appealing to cut the cost of the mortgage.
Exactly.
Yeah.
Yeah. So
Well, that's good for job security anyway, huh? But everyone wants to get a better rate, I'm sure.
yeah, it's all situational too.
Yeah. Very good. All right. So those were some of the big questions. What are some of the other questions that you get asked a lot when it comes to rates, or
With rates,
or just what do you get asked?
the biggest thing that I've been asked, and I would say this has been happening since the pandemic, is are we going to get a crash? Or people tell me we are going to crash like we did in 2008.
All right, that's a good hook. We're going to use that as a teaser. Annie's going to answer that right after this commercial, the pending crash or not, right? What do you think? Well, is that a good hook?
It's a good hook.
All right, we'll take a quick break, and we'll be back with more real estate talk right after this. Stay with us. Welcome back to Something More with Chris Boyd. We're talking about real estate this hour and on Cape Cod because it's just been such a dynamic time with rates changing so significantly over the last year. Supplies continue to be the supply of housing available for sale is still modest by historical standards, and it makes it challenging to figure out. And so let's talk a little bit about where we left that off at the break. We said I hear this all the time too. People worried that there's going to be a severe correction. I think we still have a lot of 2007, 2009, whatever the era where the financial
PTSD.
crisis and where things change dramatically as a consequence. This is a very different moment in time when it comes to real estate, is it not? Or
Oh, it
what
is.
What do you think?
It's a very different moment in time. But just this morning, our director sent us an email of a article in, I believe it was the Wall Street Journal, that said that the market in California, and we tend to follow, west to east, is definitely changing. That prices are going down, that still scarcity, but because of the rates and the banks and things like that, the houses are losing value. Or I shouldn't say losing value, correcting in value, right?
Yeah, I think that's a fair point.
In
I mean, we were just talking about houses selling above asking.
Correct. Yeah.
So now you're starting to see that taper a little bit. Huh?
Right. And conversely, in the same article, it said, yet the East Coast is still tracking high, still tracking up, not feeling it. So would there be a crash? I don't see it. Again, we have a world-class address here. Everybody wants to come. So I think that Cape Cod will always be where we are right now. That does not mean Massachusetts will, because it's not a second home market off
The
Cape.
entirety of the state.
Yeah, I think that we are rich with our value of what we offer here, and
So
that
there's
will
some
always
virtue there.
be buffering us. But it was interesting. I just read the article this morning.
Interesting. So good news for home values, maybe still challenging for those people trying to get into a house, right?
Yeah, or stay
a
on
new
the
home.
Cape.
Yeah. But I think ultimately everyone would like to see values stay, like not to give up the value in their home. We always tend to think of that high watermark as the value of my home. You know what I mean? So that's good.
Chris, I have a question for you because it's come up, if you don't mind.
Please.
So I've had questions from parents who said, how much can I gift from my financial, from my finances, where they won't get penalized, but it will be still okay with a mortgage? What is the answer to that now? If someone wanted to withdraw
the
from
amount
their,
of gifting allowance, it's $17,000 per person per
per
donor.
parent?
It could be $7 per donor per donee. So
Okay.
if there's a couple that are the parents, they could each do $17,000 to their child, and if the child's married, they could do another $17,000 each to
And now,
the spouse.
Is that annually? Or
It is.
Oh, okay.
And that's just to avoid a gift tax, so to speak, which is really just an erosion of the estate tax, kind of threshold credit.
Now that's gone up, right? Was
Very
it 15
high.
for a while?
Yes, it was.
Oh, okay. So
Yep.
I'm just
It
behind the times.
No, just in the last year it went up, the turn of the year.
That's important. I don't think people know that that's an asset.
Yeah.
Because there's an awful lot of people in my generation who would gladly gift their inheritance early if it meant they could put a roof over the heads
Help
of
the
their
kids,
kids.
yeah.
So I don't know that many people are thinking outside that box
Right.
because they didn't know it existed.
Yeah,
A
that's
lot
a
of
fair
gifting
point.
of equity too. If you're buying from your parents, they can gift you the equity, so you don't have to come up with a down payment. That has been huge.
If you're buying their house. Yeah.
Yeah, which is great, helpful. Back to the conversation on are we going to have a crash? There's also a lot of data around it in terms of across the country. If you're using those numbers, where there was so much inventory, 2007 to 9. And not
Correct.
a lot of demand, and we're opposite.
We're
now,
opposite,
where there's
yeah.
so much demand and not a lot of inventory. I hesitate to say this always, but there's if you look back the 33 years, if I'm right, Roe versus Wade, there's a boom, right, of the average home buyer's age, and it impacts how many first-time home buyers are on the market and how many people are looking for homes, and that's where we are right now, and we foresee it for probably another 2 or 3 years of having that big demand.
And as a result, the crash won't be
Right.
as you said earlier, it's a whole different salary market than it was back when everybody's making more money. We're seeing really huge incomes in the 27 to 37-year-old first-time home buyer, which gives them more financial power when they're going to buy.
I got distracted. I didn't quite fully follow what your comment was.
So back in 2008, we had a lot of demand. Builders were building houses with nobody to buy them.
Oh,
Basically,
the
right?
demographics have changed.
And the so
Yeah.
so that has changed, but the demographics have also changed.
Yes.
And it's the average age of a first-time homebuyer is still roughly the same.
Yeah.
But there's more people now.
Yeah, the bubble of the echo boom or whatever they call that. Yeah.
Let us not forget the underwriting standards have significantly changed. Back in that period, they were giving the no-doc loans and the
Oh, right.
Right.
everything before Dodd-Frank, and maybe Dodd-Frank went too far, but the standards to get a loan were substantially less than they are today. So we had a lot of buyers buying homes on non-doc loans that arguably they couldn't afford or they were overpaying. So, and those are the people who got in trouble first, which created a cascading effect in the foreclosure market. And I agree with you very much, Savannah, that this doesn't look anything like 2008.
No.
Between inventory underwriting standards and to your point, Annie, the wealth of individuals, the generation, it's not the same market. And one comment on value, because we use that term kind of loosely, we all do. Arguably, the value of the homes last year when we hit the peak was the prices were excessively overvalued, right?
Yeah.
So we're kind of going down to what the value, or retracting to what the value of the home should be, and the reversion. Your favorite, one of your favorite terms, Chris, reversion to the mean, right?
Right. They're definitely changing, correcting.
Yeah, I'm here in Florida, and last year was just literally insane. And we have a lot of building going on. Another reason I think the home prices will be further supported on the Cape. There's not a lot of building going on. It's your land is your land. Down here, we're finding new ways to build every day. So our inventory is much higher than it was, but the prices are holding steady. And there's basically in Florida, if you price your home fairly, it's selling. But if you have an idea that the value of your home is what it was a year ago, it's sitting on the market because the market's telling you that it's overpriced.
Exactly.
Do you see that with Annie? Do you see that with some sellers being unrealistic about what today's value of their home might be?
Absolutely. And I also see that with sellers who have an exceptional price in their heads. And it doesn't matter how many numbers I bring to the table. They're unwilling to.
You're looking at me, Annie. I get the feeling that this might be because of the way I handled things when I was selling my house. I'm not sure. It could be just my insecurity there.
That's why you hired me.
Yeah.
But no, there's everybody's house is the best, right? And everybody's house has a romantic assumption of value.
There's emotion behind it.
Exactly. Yeah. So it's one of those things where I just work with numbers.
My neighbor got this. I should get that.
True.
That's very true, though, Chris.
That was my attitude. That's what it was. I was like, well, if they got that, I should at least get, that kind of thing, right?
Right. And then you have to say,
and things change. Markets move, right?
And not only that, but some of these houses, because we are an older demographic on the Cape. Some of these homes have been in families for decades, and some of them still have orange shag carpet and green appliances.
Yeah, they don't see it the way of a new buyer.
And they still work. Come on.
Yeah, right.
So there's a whole generation. I'm working with a gentleman now who, if it ain't broke, don't fix it, right? Who needs white cabinets? These cherry Italianist cabinets are perfect.
They'll come back.
These spoiled buyers. They just only want the.
Well, HGTV has not done us any favors, right? You can buy a house after seeing 3 in 30 minutes. Woohoo!
Well, how has that affect? I mean, that's a great point. I mean, everyone loves watching HGTV. And, think, it's 30 minutes. You've seen 3 and you pick one, right?
Right.
I mean, how easy is this?
I have to tell you, I do giggle when I have open houses and I hear young people coming through that obviously are fans. They're almost mimicking, like
critiquing this.
And I'm thinking,
that.
there are no cameras, kids.
Yeah.
But they have to be careful because you could shoot yourself in the foot if you over criticize a property and then you end up wanting it. You got to be careful what you say.
Are typically the sellers within earshot?
No. Well, I'm going to say no, generally not. But some of our houses are smart now.
Oh,
Yeah,
good.
So
for
they
those
could,
ring doorbells, right?
yeah, they
Oh,
could
yeah.
be in their car listening
Discuss
to
your
everything.
negotiations
Yeah.
at the front door.
That is
Right.
a really good point.
Yeah,
Good
so
point.
I mean, we have to disclose if we know that there's something,
But that is a
we
really good
often
point. You don't think of that. I
know.
wouldn't have
And
thought of that.
yeah, and I always have a little tent that says this house has audio and video, which is a good security move. But don't ever say anything that you don't want
Yeah.
someone else to hear.
I forget what's the Amazon device called?
Alexa.
Alexa's listening.
Yeah.
There is.
I'm always shocked on Sunday morning or Monday morning when a seller will call and say, "What about the couple that had the red jacket on and the purple shoes?" And I'm going,
How'd you
"What
know
about that couple?" Yeah. Why
Well,
are you
they said-
asking?
Yeah, my Ring doorbell had that. Yeah, I saw
They
them.
seemed really interested. They spent a lot of time in the master.
Yeah.
You know what?
Yeah, no, I did
That's
have
funny.
one question for you going back on the rates that I wanted to ask. How do you, with your views on interest rates, what do you say to, a couple or a buyer that's getting pre-qualified for you and finds the home and all that, and they say, should I lock in that loan rate? Now, that must be a tough question right now.
It is, but the thing is, we can't lock in without a contract, right?
Right.
So
Well, they find the home and they're 60 days out or 30, 40 days out.
45.
45 and 30 days. It's really dependent on that day. So I follow an economist. I get his opinion every day. And I then look at the market. How long do we have? And what is this buyer's risk tolerance? So
Right.
if I qualified them at a 6% rate, but there's a few reports that are going to come out that I think will be negative and increase rates even maybe 1/8%, I want to lock them in. But if I think we might be able to, have some wiggle room here, I have that conversation with them. I advise, but I don't make that decision.
Sure.
Which can be hard because some people just want me to tell them what to do.
Yeah,
and I
sure.
say, if this was me, this is what I would do. But
Right.
Don't you sometimes take the attitude of bird in hand? Like at least you know what you're dealing with. You know you can afford it or not. You know what I mean? Like if you can afford it,
yeah,
like it's going to change. We just don't know for better or worse. But
yeah.
this will work. Go for it.
If it's-
On some level, don't you think that way?
Yeah, and if it seems like it's a little bit lower and we're within, usually 45 days is kind of a sweet spot of having a better rate, 45 to 35-day interest rate lock. If we're at 60 or 90 days out, we have more time to let the market change a little bit. So that's
That's a
where
good
I
point.
feel the risk out even more. I haven't done a 90-day lock in like 2 years, probably almost a year and a half,
Yeah.
whatever. But because it's just such a volatile market.
Volatility, yeah.
And that I should mention that the risk of a 90-day lock or whatnot is priced into the loan, so the rates are higher the further out you are.
So Jeff, an interesting thing from the seller's perspective, I had a seller call me last night, and she was contesting the purchase and sale because the mortgage commitment was so late in the transaction, and she was a little bit miffed about that. But because we're doing them later and later, within 10 to 15 days of close, because of the rates being so volatile, because you don't want to get it committed 3 or 4 weeks out, because then when you get to the closing table, you're not really sure. They may be paying more or less, or maybe they're not even financeable. You don't know.
Yeah.
So
That's,
we're
time
doing
for negotiations at the beginning of the deal.
right. Well, and that's why we make it only 10 to 15 days before closing, so that we can be assured that they are good to go.
Do you have any listings you want to promote while you're here?
I don't. I have happily sold everything.
Isn't that awesome?
It's like really
Yeah, but
exciting.
wow.
We did just list a beautiful property. It's coming on next week, and it is $5,999,999, right in Woods Hole on Fay Road. So be
Sure,
ready
I'm
for
sure
that.
it's beautiful.
It's
Yeah.
spectacular, a very
Yeah.
contemporary, beautiful home. Photographs were yesterday, all day yesterday.
Yeah.
And it was a beautiful day for that. So we're getting more listings. I do have a bunch coming on, but the ones that are currently in my pipeline, we've pretty much gotten rid of,
Well,
which
that's great.
is exciting.
That's great.
Yeah.
Good for you.
The average time on market right now in Falmouth is about 35 days. And what I mean by that is 35 from listing to contract. They don't close necessarily that fast. But there's probably an additional 35 days before we even put it on the market that we're working the property. Because it is a second home market, we often end up with empty homes that people have gone to Florida or wherever and have left us in charge of cleaning out.
Yeah.
So there's a lot of work to be done before we can get the photographs done and that kind of work, or septics installed.
Well, go ahead.
I was going to say that is a real common story I see. That's what I did, but there's people every day moving.
Yes. And
selling their big home on the Cape or a valuable home in the Northeast, coming down here and paying cash.
Yeah, exactly.
Well, we're almost out of time, so I want to we wanted to talk about a couple of other quick things. Annie, you have something going on this weekend, this evening.
I do. So Woods Hole Theater Company, of which I was the president for 9 years, happily not in that role anymore, but I'm still an actor and a storyteller. And tonight at the Woods Hole Theater Company, which is the community hall down in Woods Hole, and the restaurants are open, I will be telling a 10-minute story with 8 other storytellers. It's $20 a ticket. It's at 7 p.m. And we are welcoming people back from COVID to our sweet little space.
How fun.
Yeah, it's going to be fun.
Great.
Thank you.
Tickets at the door?
Tickets at the door are fine.
Great. Savannah, you have the ruck race coming up for Heroes in Transition.
I love that.
Yes.
Which is really hard.
It's a 200-mile relay race. We wear 10 to 20 pounds on our back to symbolize the burden that our men and women of the military carry with them. So it's an incredible race to raise funds and awareness for Heroes in Transition. That is going to be May 5th and 6th. So we are happily taking donations and people volunteering that want to be out on the course and supporting our runners and everything. We'd love to have you.
So how would people support you in this effort? Where should they go? How do they do that?
I would say maybe use my cell phone and reach out to me.
All right, let's do that.
508-317-8183, or if you follow me on Facebook, my race roster account is all over the place with a link, and then heroesintransition.org. You can get
Terrific.
there as well.
All right, excellent. Good luck with that.
Thank you.
Not easy. Thank you for what you're doing, and good luck tonight.
Thank you.
Thank you both for being here. It's been fun having you. Give us a little bit of the update. Jeff, thanks for the help with the show.
Sure, my pleasure.
Armin, our producer, thank you. For all of our listeners, thanks for being with us. If you need any help with your financial planning or portfolio management, reach out to us at Asset Management Resources through our website, amrfinancial.com, or give us a call, 866-771-8901. Don't forget about the spring cleaning tips on our website. Check that out. Until next time, keep striving for something more.
You're listening to Something More with Chris Boyd, Financial Talk Show.
Asset Management Resources, LLC, and J. Christopher Boyd, CFP, provide investment advice on an individual basis to clients only. Proper advice depends on a complete analysis of all facts and circumstances. The information given on this program is in the nature of general financial comments and cannot be relied upon as pertaining to your specific situation. AMR, LLC cannot guarantee that using the information from this show will generate profits or ensure freedom from loss. Listeners should consult their own financial advisors or conduct their own due diligence before making any financial decisions.